Hey everyone, I'm Frank and welcome back to Retirees Info. Look, here's what nobody's telling you about what just happened with your taxes. And if you're 65 or older, you need to hear this right now. The IRS just rolled out the 2026 tax rules. And buried in these changes is something that could put real money back in your pocket. We're talking about a brand new $6,000 deduction. $12,000 if you're married, specifically for seniors. This is on top of your standard deduction. Now, I know what you're thinking, Frank. Is this actually going to help me, or is this just another government gimmick? Here's the reality. This new deduction could reduce or even completely eliminate federal taxes on your Social Security income. But here's the catch. This isn't permanent. It only runs through 2028, which means you've got a limited window to take advantage of this. And when you combine this with the 2.8% cost of living adjustment that just kicked in for Social Security, plus changes to Medicare premiums and how much of your income gets taxed, we're looking at the biggest shakeup in senior finances in years. The average retiree is going to see their monthly check go from $2,015 to about $2,071. But most folks are going to lose about $18 of that to higher Medicare Part B premiums. So you're really only netting about $38 more per month. This is why understanding these new rules isn't optional. It's essential if you want to keep more of your hard-earned money. Now let me tell you what's really going on here. This is about your future, your retirement, and keeping your money. See, what happened is Congress passed something called the One Big Beautiful Bill back in July. And I'm going to break this down for you in plain English because the last thing you need is some financial expert talking over your head. Let's start with what actually changed. The standard deduction for 2026 just went up. If you're single, it's $16,100. Married, it's $30,200. Now, that's a modest bump from last year, about $350 for single filers and $700 for married couples. But here's where it gets interesting. For folks 65 and older, you already had an additional standard deduction, $2,050 for single, $1,550 for married. But now on top of all that, there's this brand new senior deduction that could put up to $6,000 back in your pocket, or $12,000 for couples. Let's say you're a 72-year-old single filer with an income of $70,000 a year. Under the old rules, you'd get about $17,150 in total deductions. But now you can stack this new $6,000 deduction on top, bringing your total to $23,650. You're paying taxes on $6,000 less of your income. Depending on your tax bracket, that could save you anywhere from $600 to over $1,000 in actual tax dollars. This is huge. But, and this is critical, not everyone's going to get the full benefit. If you make too much money, it starts to phase out. For every $1,000 you earn over that threshold, you lose $60 of the deduction. If you're a single filer making $85,000, you lose $600 of it. If you're close to those thresholds, you need to be thinking strategically about how to stay below the line. This is smart legal tax planning. For example, if you're still working, consider maxing out your 401k. If you're 50 or older, you can put up to $32,500 into your 401k. If you're between 60 and 63, there's even a super catch-up contribution that lets you stash away up to $35,750. This keeps you under the threshold. Say you're 66 making $80,000. If you increase your 401k by $5,000, you bring your income down to $75,000 and boom, you qualify for the full deduction. That's the kind of strategic thinking that can make a massive difference in your financial life. But remember, this is temporary, only through 2028. Right now, up to 85% of your Social Security benefits can be subject to federal income tax. You paid in your whole life, and then they tax you on it. However, this new deduction could reduce or even eliminate those taxes. For middle-income retirees, this is a huge game changer. When we talk about the tax brackets for 2026, they've all been adjusted for inflation. The bottom two brackets got a 4% adjustment. One of the smartest moves you can make is to consider doing Roth conversions. This is how you pay tax now to never pay it again. Over 4 years, that's $48,000 you've moved into a Roth IRA where it's going to grow tax-free for the rest of your life. This is what wealthy people do. According to the Tax Policy Center, about 77% of the total tax savings is going to middle and upper middle income seniors. The average cut is $220 to $300. This is about playing the long game. Every dollar you keep is a dollar you can use to build wealth or enjoy your retirement. One warning, this tax break is accelerating the Social Security Trust Fund depletion by about 6 months to early 2034. Congress will need to act. These rules create real opportunities. If you're 65 plus, talk to a tax professional. Be intentional and proactive with your planning. Thank you for watching. Make sure to share this video to the one who you think deserves to get the most benefits. See you next time.